Hey everyone, it is Evan here from the Trade Risk on Tuesday, April 28th, here with a midweek market recap video. In our last market recap on Friday, we discussed some of the updates and changes to the format that we're going to be making to this series specifically. And on Friday, we rolled out our one of the new updates, which is our trend filter, which you're seeing here on the chart. And I want to take a moment to say thank you for everyone who left some feedback. I got a lot of comments and feedback and input from all of you, which I am very grateful for, and it was overwhelmingly, I think unanimously positive. So that I think is a first in itself. The internet can be a cruel place at times, but not this time. Everyone seemed to really enjoy this new view, which is great, to see. And we are actually still modifying some of the calculations on this, and I don't want to get too deep into that right now, but I am glad that this new view is helpful in sort of smoothing out the price action and just kind of giving you an at-a-glance picture of what's going on. That is the goal of these trend filters. And I'm happy to say that there's going to be another round of updates, fresh updates, fresh new look for the market with the weekend market recap videos. So this Friday, expect kind of a new intro and a bunch of new kind of looks that I think or I'm hoping will be very helpful going forward. So I'm really excited for Friday's edition, and that brings us back to the midweek video. I'm still kind of figuring out the new format here. What I'm thinking right now, and again, I am certainly open to feedback, but I think the midweek video that we do here on Tuesdays is just going to be more targeted and specific on things that are moving, and that goes for actual individual stocks too. So in my eyes, I think the midweek video kind of going forward is just going to be a slightly lighter weight, real specific view of just what's going on. We'll touch upon the markets because everybody likes to know, the S&P and the Qs and the Russell. But then we'll look at a few stocks. If there's commodities, if there's other things that are interesting or developing, we'll talk about them. But I don't think we should go, too deep, or we're not going to cover everything because, if not a lot has changed since Friday, I don't want to waste your time trying to view the videos. I don't want to waste my time recording things that people don't want to see or nothing changed. So, we're going to try and just be a little more thoughtful on the midweek format, but still kind of working that one out. Friday, I'm spending, more time and really going to be curating a more thoughtful sort of in-depth piece where, I think Friday will be our sort of premier weekly analysis. That's certainly the way I'm thinking of it. So again, welcome any feedback, but we're going to jump into today's video here, and we're going to touch upon the broad markets and a couple of stocks, individual stocks that have earnings announcements and that can certainly impact the movement going forward for the rest of this week. So here is our view of all of the major markets. If we start in the top left here, this is the S&P 500. We're looking at daily time frames right now. So if we look here at the S&P 500, you can see that we are in sort of a breakout attempt mode right now. So I have the white dotted lines. That is price action. That is what the closing price of the S&P 500 is. And it just, again, smooths out the noise of candlesticks. We're going to look at some candlesticks charts in just in a little bit, but I like to start with this view so you can see we're attempting to break out in the S&P 500 bullish trend. If we look at the top right, Nasdaq 100, what's interesting here is this has been the leadership for us since we bottomed out in March. And what you'll notice here is if you zoom in, you can kind of see what's going on here. And this has the potential to be some type of double top here in the short term. Now, again, it would be an aggressive entry because we still have a bullish trend on this daily time frame. So we do have to be cautious of that. But notice we are starting to kind of move sideways here. The Nasdaq did outperform today on Tuesday, and we saw some rotation effectively from Nasdaq, from technology, to the more beaten up areas of the market, which is the bottom left here, the Russell 2000. Notice if you look here at the Russell 2000, you can see that we are sort of kind of breaking out above this prior pivot high here, and you can see we had a strong session today for the Russell 2000. Energy, financial specifically, lots of the smaller cap companies really kind of coming into favor and eating some of the lunch of technology that has been really strong on the past couple of weeks. Bottom right, we have the ACWX index. We're not going to talk too much about that in this video. So what I want to talk about now is some stocks, some individual stocks that are reporting earnings basically right now. And we're looking at Google in the top left. So this is certainly, a massive bellwether, right? We all use this company in some way, shape, or form. So its earnings report and its reaction to its earnings report is going to be very important to see. This is certainly going to give us kind of the first look into, I think this would be the first big look into advertising, company advertising and sort of the landscape of the businesses out there right now, given all of what has hit us in the past couple of months. So Google here is going to be a good barometer to measure the reaction to going into tomorrow and for the rest of this week, and for the Nasdaq that has rallied quite strongly over the past month or so. So if we look here at Google on how it's set up, and you can see it's bouncing around right now in the after hours, it looks like it's starting to go negative here. So we'll talk about that in just a moment. But what you'll see here is that Google is bounced all the way back up to this trend line, to our trend filter, and you can see it's still in this yellow transition mode. So this puts it in kind of a tough spot into earnings. In fact, if you're an aggressive seller here, that probably has the benefit of the doubt right now. Are sellers into a transitioning but formerly negative trend filter. So we should expect some resistance up here. We are seemingly seeing that right now. There's certainly a long ways until market opens tomorrow, but that's sort of the landscape you have right now heading into tomorrow. Of course, if we do pick things up strong again and this starts to launch over this trend filter tomorrow, then the bulls have a chance at continuing this trend and repairing more of Google. So keep an eye on that. Right now looks like it is moving negative here, but it did just report. So again, plenty of time for that to change. Now in the top right is AMD. AMD, if you can see here, I mean, just from this is why I love these trend filters, because it just shows just how strong this semiconductor has been. Advanced micro devices broke out to new all-time highs. In fact, recently, as of over the past couple of days, you can see they just sort of poke their head over the February highs here, and this is going to be an important one to watch. Again, this has earnings coming out. I don't know if they're out yet at the time of recording this, but you can see that things look pretty good here for this particular stock. So we'll see if that can continue into the rest of this week. Again, this pivot here around $55 is going to be important. If we suddenly drop below it, then we do have a potential kind of double top up there. Bottom left is Starbucks. Starbucks here sort of in a tough situation, kind of like Google, but a little bit better. You can see it's actually above the trend filter, but notice the trend filter hasn't turned up yet. So it hasn't demonstrated that there's enough strength. It is above that area, which is constructive. And if the longer Starbucks stays above here, the more likely we are going to see a green transition back upward. But until and if that happens, we still need to be a little bit cautious here in Starbucks. You can see just basically waiting for those earnings to come out, waiting to see how the market reacts. This has had a strong rally off of the lows. So we'll see if that's warranted there for SBUX tomorrow. MasterCard, I believe this reports into tomorrow morning. So I don't think this is an after hours report, but I do think this is a tomorrow morning's report if I got my dates right. You can see MasterCard here in kind of a bearish mode. It's underneath the trend filter that we have here. It hasn't recovered back up to it. We're still printing in the red. So again, if you're aggressive short there, if you're looking at potentially a rollover or shorting individual stocks, I'd say out out of all of these companies, MA looks most susceptible here, most sort of beneficial to the short side. So those are a couple of the big names that are reporting right now that I think would be interesting to watch. If we move over to, let's go back to this Google chart here, because I just want to see if it did report. Yeah, so it did report. This is a weekly chart. Let's go down to the daily. Yeah, so it is dancing around right now after hours. You can see it is. Let's see if we pull off this view. So you can see it closed at 12:32. So I actually misspoke before. Google was not negative after hours. It was using the full candle, extended hour sessions included. So in other words, it was trying to go positive on the day. It is positive after hours. It's trading at 12.79. It closed at 12.32. So 1300 seems to be some resistance here for Google. That's where you got to be careful of it. But right now, if we throw those post-market candle on here, you can see it's trading up 12.78. It's basically recovered a bunch of the sell-off from this session. So that's Google there. Let's move it back to the S&P, though. I do want to talk about and take a look at the candlestick view here of the S&P 500. If we look at this view right here, so this was our old sort of measured move projection here for the S&P 500, coming right back up into completing this leg 2 and filling the gap back here from early March. You can see we basically did that on today's session. Now, the concerning part certainly is the close of today's session. So notice we started the session off near the highs. We had a gap up going. We had a rally on our hands. And then the market, of course, sold off and closed negative here into the bell. So a little bit of concerning price action there on the intraday basis. But, if we look at, just a cleaned up view, you can see we are basically, extending this trend higher here. We're trying to break now above this 28.77 level. So we're trying to take out more resistance and continue this market, continue the S&P 500 rally to the upside. So kind of a mixed bag. I think you do have to be careful now of failure at this level. So essentially with an attempt to break out, with an attempt to continue this market higher, the way we closed here on today, on Tuesday, is certainly not the most optimistic. So if we do see follow through selling tomorrow or into the end of the week, then we might have a kind of a breakout failure zone. And we are starting to see some some signs out there that the market is tired. And this might be another clue in that regard if we see the S&P 500 get some follow through selling and start moving back below 28.75. Again, it's been uniquely difficult to call any type of top over here for the past 4 weeks. So we do want to be careful, and we do want to acknowledge the fact, right, if we want to just go back to basics and keep things very, very simple, we do have a rising sort of bullish trend filter at our back here. So it does make sense that the market should be stubborn in not trying to just totally roll over and move right back to the lows. So maybe, more dancing around here, more chop as this trend filter catches up, and then maybe a rollover as this forms a more kind of sideways top. That certainly, would be one way to see this market resolve itself. But all in all, I do think, the meaningful point, 28.75. Let's keep an eye on this little intraday failure here heading into the end of the week. We'll talk more about it on Friday, but that's what I'd be paying attention to. If we look at the Russell 2000, the Russell 2000 was the leader this week. So far this week, but also here on Tuesday, you can see it basically broke over this 126 level, starting to move higher here. 133, a lot of prior resistance in here. Essentially, this is where, going all the way back to 2017, there's been some a lot of supply traded up there. It almost gets us back to this gap fill. So that's the next recent or gap test. So this 133 to 134, that's what I'd be paying attention to as a next sort of target there. Now the Russell 2000, though, is kind of stair-stepping its way higher, and it's approximately 35% off of the lows, and enjoying some of the gains here recently as the Nasdaq takes a little bit of a break. So if we look at the Nasdaq 100, 100 here, you can see this has been our leadership group. Notice again the failure here today, and actually a bearish engulfing bar got printed. So the Qs tried to open up higher, tried to gap up and take out the highs here, tried to continue the trend higher, but notice that basically failed. We went negative, engulfed yesterday's price action, closed near the lows. So again, more signs out there that there's some short-term exhaustion out there, or the markets are a little bit sluggish. They've gone a long way, and we're certainly coming into a busy earnings season. So we'll have to see, as more of these companies report, which there's plenty more over the next 3-4 sessions. We'll see, how right the market got and priced in this rebound of, 30% plus off of the lows. So that, I think, wraps up everything I really wanted to say. Basically, let's keep an eye on these short-term one-day levels. Let's still respect the fact that the trends are still up. We're still making higher highs and higher lows in all these markets. But if you're a short-term trader, if you're very active, maybe you're starting some positions here, maybe you're looking acutely at some of the price action on smaller time frames. If you're a longer term sort of swing trader or trend follower, you haven't seen those trends break down or reverse yet, so you may be a little more cautious. This is where time frame and knowing kind of yourself and what you're looking for certainly matters. It's hard to speak to everybody's objectives in that sense. So that's it for me. Again, we're going to try and keep these and I'm going to refine the format here, again, open to suggestions, but I'm going to try and keep this as actionable and eventful as possible, really kind of talking about the things that are actually moving and actually changing. So sometimes I think this midweek video, might only be a few minutes long. Other times we may go 10 or 15 minutes if there's a lot to talk about, and that's sort of the way I see it. And again, keep an eye out for Friday's video. I think you're going to like the new format, and I'm excited to post that later this week. So that's it for me. Thanks as always for tuning in. You can subscribe on our YouTube channel or follow us at The Trade Risk. Have a great rest of your day. We'll see you in the next market recap video.